If you added up all the money in the world, how terrifying is the actual total? Let's find out. Start with the basics. When people talk about money in the world, they usually mean physical cash first, coins and banknotes that actually exist in wallets, cash registers, and bank vaults. That total comes in at around $9 trillion. It sounds huge until you realize it's a tiny slice of everything else. Most money isn't paper or metal anymore. It's digital. Checking accounts, savings, and other liquid forms push the narrow measure of money supply to about 50 trillion. But the number economists watch most closely is broad money, or M2. This includes savings accounts, small time deposits, and money market funds. Right now, global broad money sits somewhere between $100 and $150 trillion, depending on exactly how you count and which exchange rates you use. Some estimates put it closer to 140 trillion as of late 2025. Over 90% of all that money exists only as numbers on screens. Banks create it when they issue loans, and it moves around the global economy at lightning speed. This system works incredibly well most of the time, but it also means the total can expand or contract based on lending, central bank policies, and economic confidence. Now zoom out further. Money supply is just the liquid stuff. If you want the full picture of financial assets, add in stocks, bonds, and other investments. Global stock market capitalization alone recently crossed 130 trillion and has hit peaks near 150 trillion in strong years. That's the total value of all publicly traded companies worldwide. But even that doesn't capture the biggest piece. Real estate dominates everything. Houses, apartments, office buildings, shopping centers, and farmland around the globe are worth roughly $393 trillion. Residential property makes up the majority of that. This single asset class is larger than the combined value of all global stocks, bonds, and physical gold. Speaking of gold, all the gold ever mined in human history, from ancient Egypt to modern mines, totals around 220,000 tons at current prices. That entire stock is worth somewhere in the range of $15 to $20 trillion. It's impressive, but it barely registers next to real estate or even broad money supply. When you combine money supply, stocks, bonds, real estate, and other assets, global personal wealth reaches about $471 trillion according to the latest comprehensive reports. That's net wealth after subtracting debts. Divide that by the world's roughly 8.2 billion people, and it averages out to more than $57,000 per person. But averages hide the reality. Wealth is heavily concentrated. A small percentage of adults hold the vast majority, while billions have far less. The growth of these numbers over time tells its own story. Broad money supply has multiplied several times since the year 2000. Expanding at an average rate of around 7% per year. Stock markets and real estate have ridden waves of booms and corrections, but the long-term trend has been upward, driven by population growth, productivity, innovation, and yes, the creation of more money. What makes these totals feel so large, even overwhelming, is how abstract they become at this scale. $1 trillion is hard to picture. One way to think about it, if you earned $1 million every single day, it would take you nearly 740 years to reach 1 trillion. Now multiply that by hundreds. Central banks and governments influence these figures through policy. When they lower interest rates or inject liquidity, money supply grows. When economies boom, asset values rise. The system is interconnected. A shift in one major economy ripples through stocks, real estate, and currency values everywhere. Yet for all its scale, this total isn't sitting in a giant vault somewhere. It's working. It's financing homes, businesses, infrastructure, and innovation. It's the fuel for jobs, trade, and daily life. The terrifying part isn't the size itself. It's how quickly perceptions of value can change. How concentrated power over that value can be, and how dependent modern life is on confidence in the system that creates and moves it. Still, the sheer magnitude forces a question. If all this wealth exists on paper and screens, what gives it lasting meaning? Scarcity, utility, and human effort ultimately underpin it. Gold has endured for thousands of years partly because its supply grows slowly. Fiat money and assets expand much faster. Compare the numbers again. Physical cash, under 10 trillion. Broad money, over 100 trillion. Stocks, 130 trillion plus. Real estate, nearly 400 trillion. Total wealth, approaching 500 trillion. These aren't just statistics. They represent homes people live in, companies that employ millions, and savings that fund retirements. The growth since the early 2000s shows how dynamic the global economy is, from around 26 trillion in broad money back then to today's much larger figure. Real estate has followed a similar upward path. Technology, globalization, and policy have all played roles in scaling these totals. At the end of the day, adding up all the money and assets in the world reveals an economy of staggering size and complexity. It can feel intimidating because the numbers dwarf individual experience, but it also highlights the productive power of billions of people working, inventing, and trading every day. Thanks for sticking with this video all the way through. If you enjoyed diving into these massive global numbers and what they really mean, hit that subscribe button and turn on notifications so you don't miss future breakdowns. See you in the next one.